time, because when we do our forecasts, we want to survive in the worst case, and secondly, we don't want to presume that prices are going up. We say the price of a condominium or a price of a lot is such and such, and it's not going to go up. That's the basis for our analysis. And yet at the same time, we do have an interest rate forecast that we use. And right at the moment, we're forecasting rates will rise for 1.5 points over the next 2 years. Now, that may be a negative forecast in our sense, but I want to know that that's going to work for us, and so that's where we come from. It's always wonderful to have a magic in a deal. When you're doing a deal, that's what I do for a living, do deals. There always has to be magic in a deal, and the magic in a deal that we do is that prices will increase. And then you end up with a magical deal. We've got one of those going right now where we get a lot of laughs out of it because we're making more money than we thought.
And it's interest rates you follow and not availability of credit? Because some of the doomsday scenarios right now are, banks in Europe that hold sovereign debt take a hit, there will be some insolvencies, and then there will be credit contractions, maybe more serious than the ones that we saw in Toronto in the early 90s.
Well, the North American economy is dependent on the real estate industry in the United States. And we've certainly been participating. We bought, a year ago, we bought, and perhaps this won't mean anything to you, but we bought 144 lots down in Dallas for townhouses, and 45 of them were already built. And we paid $2.5 million for that package. All the lots were serviced. And we're selling townhouses down there for $119,000. These are 1,800 to 2,200 square feet. And we got it from a bank. We got it from Harris Bank, I believe, which is a subsidiary of the Bank of Montreal here in Toronto. All that inventory has to be cleared out. And there has to be some focus on that in the United States. I must say that I'm sure, unlike a lot of people, I'm very frustrated with the leadership in the United States. Perhaps it's not as bad as the leadership in Europe right now, but there are a lot more factors at play in Europe. In the United States, it should be a fairly simple thing, but it seems to me that there's a lot of childish action down there, a lot of politics where there shouldn't be politics, but the most important thing is to get the real estate industry out of trouble. That's how we got in trouble in the first place. That's what fed all around the world, and that's why everybody's in trouble right now. And if we could just have a little more focus, people paying a little more attention to what's good for everyone, I think the real estate industry can be salvaged very quickly. There's huge demand down there, but until we clean out all this inventory that's in the system, you're not going to fill that demand. Now, those townhouses, by the way, we sold them all. We made a lot of money. We bought that for $2.5 million. It's so stupid. We sold 25 units and we got all of our money back. Those are the kinds of deals that are going on down there, and it's very silly. If the banks came in and started to support the industry, which they're not, and the government's not either making them or supporting them in that effort, things wouldn't be as bad as they are. That's a peak gripe of mine. So.
Now, can I ask you, Dori, are interest rates and credit circumstances, you said you read the Wall Street Journal for recreation. I mean, do you care about banks in the way that these residential people do?
Again, I think that when you run a real estate business, because you run a business that deals with long-term assets, your ability to react to short-term, which is what's going to happen in the next 12 to 24 months, is fairly limited. And I don't think you can base your decision based on what you think is going to be. I think that if I had to give one advice to young people about real estate, is I don't care what the market is, buy a house you can afford, go get a good job, and hope that the market goes down so you can buy a better house the next time. That's what I would do. I would not ever be without a home that I own, no matter what my opinion on the real estate market is. If you want to be a real estate speculator, then I really don't have any advice for you, because I don't think it's a business that you should speculate in, unless you're willing to work hard and build a business like many of us did very successfully. It takes years to understand markets. It takes years to create credibility with the financial institution that you work with. It takes years to create enough equity so you can actually do business and not borrow the last dollar every time you do a deal. And unlike what it looks like, it's not a business for amateurs, really. Sometimes it seems that anybody who ever bought a house knows real estate, but I think it's a bit more complicated than that. And again, with respect to interest rate, we in our company found an amazing way to predict interest rate. Every time after we did a large debt deal, interest rate goes down. Almost the day after. I haven't failed. So,
I mean, I do the same thing with exchange rates. Whenever I travel to a country, the Canadian dollar goes down.
Yeah,
and
exactly. Yeah. So there are ways to predict interest rates.
Now, I mean, you've all sort of talked about how to manage some of the risks that are present in the world economy right now. Is there anything for any of the three of you that would really scare you? Like, I guess you've been the most optimistic of the three, Stephen. Is there anything that you could hear that would perhaps temper the optimism that you had about Toronto as a real estate market?
Well, there could be a government intervention to foreign investment in residential real estate. I mean, they did it in Nova Scotia, recreational properties. So I would think if suddenly the government says, look, we don't want this anymore for whatever reason, because the home players just don't have it's not a level playing field.
Something like a land transfer tax, except larger?
Well, there could be a large tax on non-resident purchasing, which there isn't right now. I mean, there's a tax when you sell. That could be disastrous. I mean, it would be disastrous for all the high-rise guys who are selling to investors if all of a sudden there was some policies that were brought into play that impacted sort of the free market of people just wanting to buy and whatever that might be. So, I think, the other thing, there's a huge affordability problem. As much as I'm predicting there's sort of, I'm talking out of sort of both sides of my mouth. I'm predicting prices going up, and yet I think there's a huge affordability problem for people who are working here in a good job, just trying to buy that house, who aren't sort of relying on all that distribution of wealth which is happening from baby boomers giving money to their kids to purchase. And, there may have to be some maybe government assistance there. Like, we still, as much as there's been a huge bubble in the States, it's also a function of, lending. There's fewer lenders to borrow from here, and tighter credit rules which have now been brought into play. So if those tighter credit rules continue, where you used to be able to get qualified on a 40-year AM and now it's a 25-year AM, and it used to be on the rate of interest, now it's on a 5-year not discounted rate of interest, so everyone's gross debt service ratio, everything is out of whack. I mean, maybe the government, for people who are here and working, have to, bring in some incentives, like maybe mortgage interest deductibility, real estate tax deductibility. I mean, there's going to be this huge affordability gap that's going to push people who want to buy, who are working here and living here, are only going to be forced to rent. And that's a social cost that, it's not the economists who are going to predict that, but I think we could see that in the next 5 to 10 years.
I mean, on the commercial side, I've read projections that dozens, perhaps hundreds of shopping malls in the U.S. would close as internet shopping became more prevalent. Is that a risk that you would consider in your business?
I think, first of all, the answer is yes, because there's no question that this time around, the internet is back. And unlike 12 years ago, it's back to stay, really just because we all got 12 years older. And there's a young generation here that is much more capable and willing and wants to shop online. What we see, though, is, and you see it already, I mean, you see Best Buy announcing that they're downsizing their stores. I have no question in my mind that retailers will need less square foot to sell the same amount of merchandise, because a lot of the shopping and the legwork is going to be done on the internet in terms of looking what you want to buy. But what we see right now is that the biggest winners in the new sort of internet waves are the multi-channels, the guys where you can order something online and return it in your neighborhood. And if these guys are smart, and if these guys are good marketers, which for the most part they are, they're definitely going to be successful. When you look at the more basic industries like drugstores, supermarkets, things like that, our view is that the supermarket business could go online as long as not too many people using it. Because if you think about neighborhoods, especially neighborhoods with families, and a bunch of trucks trying to make shipment by 4 o'clock, it's going to be stopped very quickly. I mean, you see neighborhoods today in many parts of the city that you're not allowed to go in with trucks between certain hours.
Right.
So there's obviously going to have to be some kind of intermediate station between big distribution centers and homes. And it's possible that maybe 10 or 20 years from now, supermarkets are going to have 2 lanes of drive-through where you're going to make your shopping on your normal stuff through your iPhone and really drive by and pick it up, and somebody's going to pack it for you. But we don't think that large commercial land in the middle of high-dense residential areas are not going to have a use. It may change, it may be altered, but I think that the internet is there, but I'm not sure it's going to hurt every type of retail.
I mean, clearly it isn't, but you said that one of the dimensions of your business that really matters is which corner your mall is on, a good one or a bad one. And I guess I hear you saying the internet might change that. It might mean that the corners that are good for the internet, where you're driving out to Best Buy to pick up an iPhone or something like that, are different maybe than the corners that you would do for non-internet shopping.
Yeah, I think it's very hard for us to predict how retail is going to look 20 years from now, although we are in this business. But I do think that when you look at good corners with access and visibility, they will serve their purpose. And if not, a lot of our shopping center today gets a lot of density, so more residential, more service retail on the second floor. Retailers, in order to get to certain urban markets, are compromising and going to second floor, to third floor. So the trick, I think, in our business is you got to be in trade areas, and bear with me, it's a bit philosophical, but you got to be in trade areas where the growth in population or in income will exceed the growth in square foot per capita of retail space, or the ability of that trade area to produce more retail. This is the equation that you got to think about.
Right, you were saying it was 6 of one, half dozen of another with the supply and the demand stuff. I mean, you mentioned speculation as being, especially offshore speculation as being pretty important in some residential segments.
Speculation, I said investing.
Investment, sorry. I've translated it for you, but I'm an economist, and so I'm wrong. I mean, are there factors that you think would make Toronto less attractive to people from away who are buying things to rent here or move here themselves or bring their kids here? Is that something that we should worry about, or is Toronto so wonderful that we'll be doing well forever?
So Toronto's very attractive. I travel around the world the way I do, and our company does. It may be the most attractive city in the world to investors from offshore. We're what you would call a gateway city. I think in many senses we're more important than Vancouver, which is also a bit of a gateway city. Residential real estate in Vancouver is double the level that it is here. We've developed in there, and Toronto's the business hub of Canada. There's every reason why the real estate in this city should be sold at higher prices than in Vancouver. We're perhaps never going to be in New York, but with the right political leadership here, I think we have a chance to be one of the great financial hubs in the world. We've certainly established our banking system as being a superior one. In a lot of senses, it's a legislated result, but we do have a wonderful banking system. People feel secure here. Our political system is very secure. We have a great democracy. I personally happen to think we have a great leader right now. I wouldn't have said that maybe 6 or 7 years ago, but I think we've got a guy who's really stood up, and he's being counted, and that's very attractive to people offshore. They like someone who's strong, who doesn't exactly bend with the wind the way a lot of politicians do. And I could go on and on and on about why I think this is a great place to invest. I'll leave you with another thought. Back in 2008 and 2009, we had a hiatus in our business when there were no starts. The banks disappeared, and Nothing happened. At the end of 2012 and on through 2000.